Okay, we were talking about my money management and we went through all this stuff, but I think we need to do something else before, and it's to investigate a bit more the Excel file and some other scenarios. So let me go to the Excel file. Okay, here we are. So we say that this is a scenario of 2% risk. Also, let me hide that's also well, hide to get the RR. There we go, that's the RR. So let me get this stuff out. Okay, and we'll play around to figure out a few stuff that these guys are mentioning and how we can optimize our trading strategies. Okay, I want to show you what's happening, what's going to happen to your equity. The RR 2%, 1 to 2, 10,000, 2%, okay, risk. And this is what's happening if we start losing continuously. Now, you will note that I will lose. This is what we were talking about, the 30% that this rule says. Okay, sorry. So I will lose 30% within 18 trades. Now, if this 2% was not calculated on the exact previous equity and we were just trading fixed 200 euros per trade to be our risk, this is what is going to happen. Okay, right now we lost 30% in 18 trades. Now, if I make this fixed loss, 200 euros, all right. So I lost the 30% on 15 trades. That's less, okay? That's much, it's less than before. Before it was 18 trades, all right? So that means we are increasing our losing rate if the value that we lose is fixed. Okay, let's do something else. Let's say that I want to be a smart guy, and I am a smart guy, and I want to trade much more than this 2%. What is this? This is too small for me, eh? Okay, so I will increase that. Let me get the equations back. All right, so I will increase that to 20%. So I will risk 20% of my equity on each trade. This means if it was a fixed amount of money, that means 20% of 10,000 is 2,000. So if I was to trade with fixed amount of money, 2,000 loss every time. All right, so let me go down. Whoops. Sorry, not 20,000, minus 2,000. Okay, minus 2,000. And we start going down. My capital was out in 5 trades, and the capital went 0. And the probability this happening to have 5 consecutive lost trades in a system where your success rate is 40%, okay, it's 7.8%. 7.8%. If you have a success rate, there is a chance that you're going to have continuously 5 lost trades, and there is your bank. It went from 10,000 to 0. This is going to happen. To tell you the truth, my trading experience, not only 5 consecutive, I have also in my records quite a few times 8 or 7 consecutive losses. All right, so this is not the way to trade. All right, let's look at another more realistic scenario. I will trade instead of 20%, I will trade with 5%. Okay, 5%, it means that I will lose my full capital if that 5% was a fixed amount of money. Okay, well, I will lose my capital in 20 trades if I was to continuously lose 20 trades. Okay, this is a very, very rare possibility, but what is not rare is to have, for example, continuous 5 and continuous and another and a win, and then another continuous 5 and a win. So in this case, when you're risking 5% and your risk is according to the percentage and not a fixed value, so since I'm continuously losing, the value drops, okay? In order to get to 30% losses, I need 7 trades. 7, not impossible. It's happening, okay? 7 trades and your bank is 30% down. And then you need to regain this 43 up to break even to 10,000 again. So guys, a good way to start is that 2%. Okay, so we have to consider all of this stuff at the same time. Probability, the losses versus the required gain to break even. Okay, so 2%, 3% is good. For example, if I was that good and I was getting a success rate of 60%, which I think it's an amazing for a Forex trader to get 60% or 60 above. I am getting this once in a while in some months, okay? And I used to trade with 3% risk reward with a success rate of 60%. Then to have consecutive 5 losses, it will be a probability of 1%, okay? And in order to empty my bank using this system, okay, I need to go down many, many trades, not, okay, many, many trades, but also to increase my bank, I need many, many trades. So it's not only when you are emptying your bank, it's how you're going to get your bank and your capital and your equity back up to where it was, okay? So the best thing is stick to -10, -20, okay? It's going to be much easier to recover your capital. So if you lose one day -20, quit and trade the next day. Now, if the system is continuously losing, then the system is wrong. You should change the system. So this is all theory, but you get how this game is working. This game is working. Money management is the most important tool. Okay, and as Mark Douglas used to say, you don't need to know where price will go in order to make money. You don't need to be so successful in your winning rate. It's all about this. It's all about the money management, okay? Now, I will show you on my site. I started the channel where I post the trades, okay? And I'm also recording the performance. So I will show you the actual results and the actual Excel of these trades. So let's go to that Excel. Okay, actually, let's go first. Go to the channel. So, well, let's go to my site. So let's go to my site. Sorry. Okay. Okay, right here, trade the volume. Where's that the site? So anywhere you're gonna be in the site, you're gonna see this live results thing. Okay. Now this is coming from my Discord VIP channel. Okay, and I have started recording all the trades placed on this, posted on the channel, and also the results. So you can download this Excel if you wish, of course, and you can play around with it. And you can also ask me any questions you like. You know where to find me. So let's go to this actual Excel. Okay, you can download it from here on the right. So this Excel is this one. So this started on October. Started in October. Okay, so these are all the trades. In the beginning, I didn't write my signal. Then I started writing my signal. Also, my target and my stop, the actual result and the RR, and it's playing with a 10,000 initial capital and a 2% risk. Okay, this is fixed. I'm not changing anything. So the only thing that changes is the risk reward. Sorry, yes, depending on the structure of the chart where I place my stop and my target, and this is what I actually risk, and this is the cost per pip plus the winning loss and the equity how it goes through. So currently we are on the 26th. These trades are still open; they haven't closed, but up to here, okay, this is an equity growth of 41%, okay, on 92 trades starting from October to the 25th of January, 3 days back. So let's see in a chart how this it looks like. Now, before we do that, so my average RR here, it's if I add my full target without the last two, so up to 90, oh sorry, add, okay, up to 92, and also my stop, okay, this is on the trade where I placed my target and my stop. So this RR here, the average RR on all these trades, is, sorry, what did I do? It's a mistake. It's 5. 2% exactly, yeah? 2% exactly, even though you will see in some trades it's not 2%, that's the RR, okay? It's not 2, sorry, it's 1 to 2 ratio, sorry, not 2%, 1 to 2 ratio. So these are the actual ratios, okay, of some trades, and this is the cumulative result. So let's look at our assumptions, okay? And so the assumptions here, we start the balance 10,000. Trades are done on a tick chart or on a time frame chart. I use both type of charts to trade. Calculations do not include broker commissions or swap, okay? And there were two missing trades on the Excel that you saw. And the risk drawdown of each trade is 2%. So the risk is 2%, all right? So starting date, ending date, starting balance 10,000, ending balance 14,000. So 41% up in 90 trades within or 3 months. So 72 working days. Okay, 72 average trade 1.3 trades per day. That's the stats, and that's the equity chart. Okay. So as you can see here, the blue line is how my equity started. I got a first win 100, then I went down, and I started keep going up. And this is the drawdown. That's the maximum drawdown, consecutive losses within the day. So as you can see here, I had a drawdown. My worst scenario here, it's almost minus 8%. Okay, and which is really good. And I think it's also visible on the trades here on the right. Yes, that's the drawdown here. So basically you can see here, let's look at the big numbers. I got 1, 2, 1, 2, 3, 4, 5 continuous losses. Okay. 1, 2, 3, 4. 1, 2, 3, 4 again, continuous losses. So this is happening, guys. It can happen, okay? It can even happen much more. I had 8 losses. Okay, and this is what you see on the chart. Basically, this is what? 1, 2 loss, then a break even, another loss, another loss, another loss, and another loss. So 1, 2, 3, 4, 5, 6 losses, okay, and 1 break even, okay. So basically, management is, I think, the most important in order for you to make money, to manage your own trading shop. Thank you for watching. Next video coming up, lesson number 7 on traders psychology. Thank you and bye-bye.